Hi, I'm Alfie Fleming, and this is Tully. We work on the fuel broking desk at Onyx Capital Advisory. Welcome to the third episode of our fortnightly fuel oil update. In each episode, we review the recent movements in the fuel oil market and share insights and factors driving these changes. We'd love to hear your thoughts. Feel free to share your views by commenting or messaging us directly. So Fred, what noticeable changes have you seen in the high sulphur fuel market?
So Alf, since our last episode on May the 22nd, we're seeing quite a volatile market. It's been weaker than expected US data releases come out. We've also seen OPEC as well. Their output policy decision had come out as well, which made the market quite volatile. We also saw crude sentiment become a bit bearish because of this. In the fuel market, the main noticeable flows has been the 380 East-West. So back in May the 22nd, we saw it trading at about $33.50. In February, it was trading minus $650, so it's quite a difference there. Since then, since $33.50, it retraced back down to $23. Back on June the 4th, which was only a few days ago, it was up at $40. It's now back down to $24, $25 roughly at the moment. Similarly, in July 3 East-West, we've seen it go from $18.50 down to $11.50, and then it's rallied back up at $20.50 before retracing back down to $13. Since May the 22nd, July 3.5 cracks had gone from $8.10 up to minus $6.95 on June 4th, and then it's dropped down back to minus $8.40. June 380 spreads had rallied $12 to $18. While July had traded from $7.75 to $6.75, rallied to $8.25 if I remember correctly, and then dropped down to $6.50 in the past few days.
So I saw an Indonesian refinery, Balikpapan, halt their operations on their number 4 CDU unit. Do you reckon that had an effect on the market?
Yeah, I believe it did have an effect, Alf. It's one of the largest refineries in Indonesia, so there was some uncertainty about supply for the eastern region. We saw 380 gradually rise after this. Then after that, we saw the OPEC news come out, which continuing their cuts up to Q3. But then in Q4, we'll see them boost crude production. So that should play a big part in it. From there, we did see 380 cracks rally, higher than 3.5 barges. So that is why we saw the difference in the 380 East-West. Once the market had absorbed this news, though, we did see a reversal in Brent. So we saw 380 East-West follow suit as well. So then we observed the back end of the curve had pushed the front tenors up. Today, the July 380 East-West opened at 15.25 before the crack weakness put pressure on the East-West, and it sold back down to 11.50 just after the window this morning. So, Alf, have you seen similar in the low sulphur prices?
So in the low sulphur oil market, we've seen 0.5 cracks been pretty volatile this week. With July trading at 9.30, coming off to 7.75, rallying up to 9.85 on the 4th of June, and then coming back off to 8.65 at the moment. July Aug seeing 0.5 spreads, traded at 3.75 up to 5.50. It's now come off again and trading down at 4.25. July Euro cracks traded 2.85 down to 1.75 on the 27th of May. Then we saw a big rally up to $3.10 on June the 4th, and then come off down to $2.15 at the moment. July 0.5 spreads traded at 3 and was range bound between $2.50 and $3 until the June the 3rd, and then we see spreads come off down to $1 currently.
So what are your thoughts on why these movements have occurred?
So my thoughts is that the Asian low sulphur fuel market structure has been weakened over the last couple of days. Alongside the physical prices are at a 5-week low, with weaker deals in the June loading for physical cargoes. There's persistent lack of demand in Singapore, which is expected to see additional supplies coming from Europe in the coming weeks. We've seen the same in Europe with high stockpiles and low demand.
Thanks, Alf. Thanks for watching, and we'll see you in 2 weeks' time for another talk on fuel.